Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for May 27th, 2018. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.08 fell slightly from 1.14 last week, continuing within bullish territory. The total count of securities in bullish or bearish patterns decreased 4% to 2,832. The count of bearish stocks decreased 1%, while the count of stocks in bullish patterns decreased 6%. The Pirls PNF Market Breadth Summary Chart shows us a market now 3 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 98 points for the fifth advance in 7 weeks. At a positive 354.97 points, it has risen above the July 2017 and March 2018 tops and continues below the remaining 7 tops above plus 100 in the last 30 months, and it continues above all 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 1 accumulation day and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in distribution mode on lower average daily volume. Momentum. The CCI 20 daily at a positive 80.57 is up from a positive 70.29 last week. After last week's successful trade simulation completion, we wait for the CCI 20 to return to the plus or minus 50 range for another zero-line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 108 weeks ago, while the daily CCI 20 began a Woody's uptrend 5 weeks ago. The CCI 20 weekly rose to a positive 83.37 from a positive 78.6 last week, continuing outside the plus or minus 50 range required for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: some tech and retail on top. Oil, oil services, and KBW Bank on the bottom. Bullish, disk drives continues in the top 5. Semis and S&P retail have entered the top 5. Networkers and REITs have left the bottom 5. Oil and oil services have left the top 5 and entered the bottom 5. Bearish, KBW Bank has entered the bottom 5. Focus this week from www.zerohedge.com. Moody's. All of retail isn't dying, but brick and mortar probably is. The following are some key points and a chart. We have continually reported on many of the surefire signs that brick and mortar retail as a sector is still feeling enormous pressure from online retail and is, for the most part, simply disintegrating. On top of a number of bankruptcies over the last year, including stores like Bon-Ton and Toys R Us, retail department store space is also freeing up, and landlords are having trouble finding tenants. A new report out by Moody's, however, makes the argument that it isn't all of retail that's dying, just mainly brick and mortar. It also makes the point that e-commerce is what's primarily holding up retail in general. The first point we'll take with a grain of salt. The second we can concede a little easier. Moody's concludes with a much brighter picture than we have pieced together from our own findings, calling this shift a necessary one occurring in a dynamic economy. While e-commerce is undoubtedly growing and has been a factor in the closing of some retailers, the brick and mortar retail sector overall is not undergoing the kind of structural job loss seen, for example, in manufacturing. Instead, retail is undergoing a process of gradual change that is necessary in a dynamic economy, but it is not yet a major disruption or cause for concern. We're not that quick to agree. Recall, we recently reported on how mall properties were starting to turn up vacant at a higher clip than ever before. In addition to that, we reported that retail landlords were having difficulty bringing in income because brick and mortar stores were processing online returns, which was eating away at their sales figures that are used to make up a percentage of their rent. As if the rise of e-commerce on its own was not enough to single-handedly cripple brick and mortar retail, retail property owners are getting hit with collateral damage. Online returns being made in-store, which are then subtracted from a store's sales, are turning out to cost property owners material amounts of money. Many retail property owners are paid rent that is correlated to the amount of sales consummated on their property, but the convenience of being able to buy online and return in store has put significant pressure on these figures and, in turn, property owners' earnings. We documented that over 77 million square feet of retail real estate has closed this year, and that 2018 will easily pass 2017's record of 105 million square feet closed. The silver lining to the industry was supposed to be that property values would hold up. This argument was made by real estate investment trusts as well as activist investors and analysts who tried to put a positive spin on the death of brick and mortar retail. But instead, the bid under former retail property is at risk of falling off as supply is starting to get far ahead of demand. While the Moody's report goes on to make a compelling case that retailers aren't dead yet, we believe it's worth noting that brick and mortar, as a subsect of retail, likely is on its way. Thank you for watching this week's Sand to Pirls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant Memorial Day weekend, that you are looking forward to a prosperous and productive week coming up, though short, and wishing you true success.